Good Friday morning, everyone. Hey, this is Rick Kaufman with LMA Trading and TGIF, TIGIF, or whatever you want to call it. So, hey, we made it to another Friday. Today is Friday the 17th. It is quad witching. And basically, everything is rolling over today. And we've had a lot of chop. Markets look like they found some support after about Tuesday, Wednesday, but we have just been chopping in this range. The Dow's been chopping roughly 34,380, 3,400 to, 30, just under like 35.9 or 34.9. So it's been chopping right in there, and the range has been getting tightening a little bit, but we may be finding a base here. So I think maybe we're coming to the end of this here, because it looks like the momentum is slowing to the downside, and everything is getting ready, because we have the green ready on our dailies on the futures. So with the Dow, actually, we should probably see a fire signal to the upside here next week. So things are starting to look good. A lot of things are setting up. So let's get into today's video. Um, and we always have to start with a little bit of housekeeping. And just so everyone knows, I am not a financial advisor, nor do anything I do or say in these videos constitutes any type of financial advice or recommendation to buy or sell a stock. These videos are strictly part of my trade journey. I add these to my trade journal for review, so I can go back and review what my analysis is and my technical analysis, and to improve upon that. So hopefully, from an education standpoint, or even, maybe this is some entertainment, because you get a chance to see some old guy up here who's rather risk adverse, who doesn't like to risk money, but stocks have risk, and so do options, and they're not suitable for every investor, and you can lose all your money. So I always suggest take your own picks, do your own analysis, decide on your entries and exits, manage your own risk, and that is the name of the game. So, well, that is going to be something that we're going to talk about in today's video. How do I manage my risk? How do I, or how much risk do I put on a trade? So that's something we're going to do this as part of our pre-market prep. So let's go ahead and jump into our charts, and we're going to start with the Dow. And the Dow, actually, on the weekly chart, has been very, very bullish. We have got this pullback to the 21 last week, and this week, basically, if this candle closes out the way it is here, this is, kind of a good indication, even though the bulls or the bears have pushed the price down. The bulls or the bulls get them confused a little bit, but the bulls are in control of the price action here this week, ever so slightly. And that would also, and what, kind of, even though on the daily chart, we've got a lot of red candles in their full body candles. So these would indicate very bearish candles. Bulls won this day. So over the past 2 weeks, the bulls have only won 2 days out of all these days here. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. So 2 weeks, 2 weeks, and we'll see how this finishes up here today. But most likely as a quad witching, with the SPX roll and everything kind of, contracts, expiring. We had monthly expirations, and we have, rolls. Today is probably going to be actually one of three things that is going to happen. The markets could come out really, really strong at the open and just take off, or they could take a nosedive, or we just have some chop I'm going to probably say that based on the Bollinger Bands here, they are opening up here to the upside here on the daily chart. They are flat on the weekly. They are pointing to the downside here a little bit on the daily. So, this would then because we're below the 21 and below the daily 50. There's going to probably be some pressure on the markets today, and so from a risk management standpoint, I would probably, if a stock is trading and has a similar pattern as the index, I would not probably go long today on that. That would be my game plan today. Now, if I had a honey badger stock that looks like it's being very strong and everything, for example, let's take a look at Crocs. We were in Crocs. Boy, I will tell you what, I sold out of Crocs on this day right here at the top here because it'd been trading in a range, and I got out. We made a nice little profit, but then we missed out on this dive, but then we missed out on all this move. So could have got right back in down here on the lows and rode it right back up here, but this is a honey badger. This is what, it is bucking the trend. It doesn't look anything similar to the NASDAQ. So this is what you're looking for. But again, managing your risk. And typically when the markets are like this here, about 2% risk is all that I put on. And I don't really put that much more risk on. Um, and, on an account. And so, that's kind of where I'd like to be. Now, if you have a small account, 2% in options may not even be an option. No pun intended. But you may have to improvise a little bit. So possibly it's 2 or 4 or maybe 5%. Stay away from 10% because 10% risk on an account is basically, if you had 10 losses in a row, and if they were and you put on a 10% risk, or you're risking 10% on your trade before you stop out, you lose your 10%. 10 losses on an account like that, and you've blown up the account. So, a 5% risk, now you've got 20 losses in a row before you blow up your account. If it's 2.5%, and now you've got 30 losses, and you do the math and kind of do that, and it's so. And that can happen if you're in a slump or anything like that. I've had as many as 6, 7 losses in a row over a period of few days, and for whatever reason. So emotions is another big part of managing your risk. So let's take a look at the Russell. The Russell, we were looking at playing the Russell to the downside here yesterday, and we could have got in up here and shorted the Russell. But then the reason why we didn't, this would be for Monday's expiration. The reason why we didn't was because we already put a short on the SPX for today's expiration. So that was, it worked out perfectly according to plan. And I'll show you that here on the charts when I get to it. And so that's what we're, basing this on. So I felt with the way the market and quad witching and everything going on today, I felt that was too much risk. That would have put a total risk on the account of, a better than or about 4 to 5%, I think it was. And so on the two accounts, and going short on both, if with the way the markets and the indexes are running, I just felt that would not have been a good bet for today, going in today. So we'll see what happens with the SPX. Right now, we're sitting really good on that. If the markets continue going the direction that they're going, we'll see what they do at the open, and we'll make a determination probably in that first 30 minutes or so what we're going to do. And then, so that's the reason why we didn't put anything on the Russell, but the Russell's just below the 21. But if you look at these Bollinger Bands, the Russell's going to be heading into some consolidation. That's going to be my guesstimate here on the daily. We've been in a weekly squeeze for several months since, back in, looks like back in May. We went into a weekly squeeze with no real sign of the squeeze firing and trending ever so slightly downward. And so we get down to this level 2164, then if you wanted to, you could play at 2164. You could play this back up to 2260. So about 100 points of room here on the daily chart. So just something to think about. But with the way these Bollinger Bands are looking, I would say probably I don't think we're going to get down to the 2160 roughly to this support level. So I think the Russell's setting up here it's going to go into some consolidation and begin to tighten. So we're going to see some distribution possibly, but then Russell's going to make a march higher. When that's going to happen, I don't know. Let's jump into the VIX, and I'll begin to tell you why I'm sitting pretty good on the my SPX trade. The VIX yesterday, just to kind of, I don't want to jump into the intraday chart so you can see it a little better here. So we'll look here on our 4-hour chart on the VIX. The VIX spiked up here, and this is about where we got in yesterday. It just tanked. It went the VIX kind of tanked. It went down here, but when that happens, price goes up. We actually went in the money, and but then afterwards, and then after hours, we've now come back up to the high of 1905. Here is where we're at now, but we did hit almost 1963 in pre-market. So it looks like VIX is dropping. And so with that being said, we're going to probably see some ease in here. You can see it here really good on my 5-minute chart here on the VIX. So right here, when you're looking at this, sometimes it's easier to turn around and put the minus sign in front of the VIX. And let me show you something here. So if we put the minus sign, because the VIX is inverted to the S&P. So if we put the VIX, it's going to reverse our chart. And so now it looks a little more like what we would probably want to see on the daily chart. So this kind of shows you like right here yesterday morning, this is where we got in down here on the VIX. And so sometimes reversing the chart kind of gives you an idea, like, if I wanted to be, on a direction on this, where would I want to get in? Right here, here's the low of the day. And then, here's the trend right there. And so that kind of gives you a good indication of, what it's looking like here on the 2-hour chart. You got a nice double bottom. So we're getting a spike up here on our 4-hour chart. So, if you're bullish, sometimes, change the chart around, and that's how that's your bias. So you have a better read on the charts. If you're bearish and if your bias is bearish on a chart, then sometimes you can just go into flip the chart around and because if you normally read on a bearish chart and trying to determine whether or not that looks like it's a good way to get in, just put the minus sign. Same thing on the ES. You can do the same thing. So, if we want to put the minus sign in front of the ES and hit that enter, it'll flip that chart around. Now you get a whole totally different look. Now this looks very bearish. So now it gives you kind of an idea and say, okay, is this where I'd want to short the stock? And so kind of, just, FYI, just for a little bit of context on that, and it puts you below the daily 50. So it sets the chart up to look kind of bearish. And then that way you can get a better read on the pullback. So you can jump in on a short, just saying here. So no. So there's a little tidbit for the day. Anyways, but this chart is very bullish, and we've got this pullback back here to 44.30, and we are holding there on the weekly chart. Again, ever so slightly. The bulls are in charge of the week, and similar to the Dow, 10 days down and 2 days the bulls have been in charge. And we'll see how today finishes up, where we are down just a little bit, but we have volatility dropping. So we're going to see price action probably go up here a little bit into pre-market for the last hour, a little more than an hour and a half before we enter into the cash session. Now, that takes me into the Qs. The Qs probably have more downside to go, but again, we are catching support here at the 2 ATR, and we haven't really pulled back into the 1 ATR. We didn't get to this level of support of 15,172. Still a long ways away to go down to 15,172. Looking at the Bollinger Bands, we're not getting there. I would not say that we've got the steam or to get there. Just like the other charts, with the way the Bollinger Bands are coming in, they are restricting, and so we're going to enter into some consolidation here on the Qs. So this would be area where, again, risk management, looking at a tight range of probably 15.3 up to 15.7, we'll call it. That would be the range. So a 400-point range, if that, is probably what we're going to see. And so if you are entering into a bullish stock here, you could potentially be getting in on the high of the day, and then have to sit through all this going down. But again, the FANG stocks are going to be the leaders. So what the FANGs do, if the FANGs are very bullish and they're very strong and they become a honey badger stocks where the Qs are wanting to pull back or constrict, the FANGs are going to be the leaders. So look for this to potentially break out, I would say, in the next week or two. We may not see a new high on here for, maybe until September is over, or maybe into October. But that's going to lead us into a great November and December. So, with that being said, that's what I wanted to share with you this morning, talk a little bit about risk. So risk management is the key to success in the markets. This is not a market that, you'd want to go 10% risk on. This is not a market that you'd want to go and just look for singles, maybe doubles, but you get a single, look for a 1 ATR to 2 ATR move out of something, and then get out of Dodge and take the profits, because you never can go broke taking profits. That's what I always keep telling myself. But these stocks are all setting up on the daily chart, and they're looking pretty solid. And so that's what I wanted to share with you. And look for stocks that are not following the trend of the market. But if they, like Crocs, like I showed you in the beginning, if Crocs is way overextended, I would love to buy stock. I've made a lot of money on Crocs since last year. And Crocs just, we started playing Crocs when it was like $50. I just wish I bought a bunch of it at $50 and let it sit. But nonetheless, we still made good money on Crocs. And so, with that being said, it's definitely a honey badger stock, and it'll stay in my wheelhouse for quite some time until it no longer behaves the way it does. So with that being said, you guys have an awesome Friday. Thank God it's Friday. Click the like button, subscribe, share, so you can catch us on Mondays, on Money Monday. So that starts a new week. We got quad witching behind us, and we're going to get into probably some better looking charts. There are so many charts that are setting up that are looking really sweet. And so they've all, most of them have pulled back to the mean on the weekly and on the daily charts. So they're setting up, entering into squeezes. We're getting, we should start seeing buy signals on a lot of these things. So making some nice moves. So to put in a nice finish to the year. That's what we're looking for. So with that being said, guys, have a great weekend. Be safe. We'll see you guys on Monday.